And welcome, my dear friends. Morpheus with you on another exciting episode of Trading by the Book. Today, my dear friends, we're going to continue to evolve your knowledge about what it takes to make money without relying on luck, but on logic, math, statistics. This is something that I've been proving to you for quite some time now, and if we take a look at, let's take a look at actually, wait a second, let's switch over to the screen. Let's take a look at the previous, I don't know, 7 days. We see that, yes, there was a bit of a dip. Actually, we should take a look at a custom range, right? So we're not to include the weekend, but essentially, yeah, let's go from this to this, from Monday through Sunday. You see that, Monday, Tuesday, Wednesday, and Thursday, there was a bit of a dip, and on Friday, we took it back up as well. I didn't trade on the weekend because it's, family time, but the idea is that I'm not selling you a trick, a particular, oh, just do this, you'll be in the money. No, we're selling, comprehensive knowledge. And actually, I don't know, if you take a look at the previous video, you'll see that we discussed exactly what seemed to have transpired. You see, I'll remove these, but on Friday, we kind of discussed the multi-time frame graph. All right, so we're looking at Japanese candles, and we're looking that after it touches a particular amount of times, the support or resistance levels, right? We have continuous adjustments of these levels, but on the daily chart, I told you last Friday, actually on this candle, this was on the 31st right here, that was a Friday, uh, right? Actually, I don't even know, but I think that it was, right? So on the 31st, I told you, or maybe on the 30th, or, 30th or something, I told you that if it's going to bounce away, chances are it's going to continue to bounce away. And where is it going to bounce away to? It's going to bounce to the third point contact. Here we actually have, if we could adjust it like this, we have a 1. I don't know. Usually people put the support resistance levels at the body of the candle. Some of them do it at the wicks. I'm the I guess I favor the bodies of the candles, but this is also means that if we take a look at 4-hour candles, this particular level, right, we see like a 1, we see, if we adjust it here, we got 1, we got 2, we got sort of like a 3, right, if we lower it right here and then raise it up like this, there we go, we got 1, 2, 3, and then, on the fifth time, I guess, that it came back up, it finally broke through. Now, notice it broke through. There's a breakout strategy, which also kind of gives you a particular signal. We have parabolic right over here. It started to go up, saying that there should be, I don't know if we got like maybe CCI in here and shaft for trend reversals. Look, we actually got, yeah, right here there was a buy signal at this candle, red candle right here. We had a buy signal from shaft. Right, actually, no, maybe like at the start of the green candle. So on the parabolic, at the, right here, we've also got CCI that said it's going to be going up. So it did. There was a pullback and it finally broke through. Now, when it breaks through, when it breaks through, you also need to be aware to what level could it break to. Right? That's why, once again, we were looking at, I set these lines up on Friday. So today being Monday, you can understand that I already told you about this 2-3 days ago, what will happen. That if it does break this level, right, remember at 4-hour chart, we adjusted it that it came across the wicks, we got 1, we got 2, right, there we go, we got 1, we got 2, we got 3-point contact, and on the fourth time when it finally broke through, it broke through it. But we also want to know how long it's got, what kind of potential it's got to break through, to continue. Right? And that's why why I told you that, hey, if this is going to break through, chances are it's going to test a third point. And it did. It tested the third point. Now, this was the new highest high. Right, so we have the previous, right, we got, kind of where we have like maybe a resistance level running here as well, which actually we could, let's set this up so that we can see. The reason is that we're going to be continuing to kind of talk about this. This is very important, truth be told. Right, so we could say maybe kind of even like this, right? So we got 1, 2, 3, 4, 5 point contact. So it touched here, and I told you about this on Friday that it's good. If it touches it, this would be the point of entry. So it touched. There's a bit of a pullback. Parabolic is the first one here. CCI, it's just touched it. So I honestly think that right now we're in a bullish dominant movement, that it could actually break through this level. And where is it going to go? Well, it's going to go to the next level, which we have established, and it's about this line. So the interesting part, I don't know if yeah, there we go. The interesting part is that sometimes we look at this kind of chart and say, well, what the hell? It's not a big movement, right? I mean, what is the difference between, what is the money value of this candle? Well, what is the money value, right? We put it right here and we see, right, it's 13.93 and the highest point is 15.35, right? So to make 13 into 14, it's 7 pips, right? We talked about the fourth digit after the decimal, that's the pip. Right, so in this case, to turn, essentially that's 7 pips. Right, so this way, the fourth one would be single digits. The fourth one would be single digits pips. Third one would be tens. Third one would be hundreds. So we got 7 into 14, 14. So it's 107 to 15. 15 plus 35 would be, well, essentially 50, right? 100 and, wait, what did I say? 7, okay, so 107 plus 35, so 150 pips, right? So 150 pips from the bottom of this candle to the top. Remember that each pip in Forex equals approximately $10, right? $9 to $10. So let's round it up. 1,500. Right, 150 pips. So if somebody opened the position here, at this point, at the end of the day, this would be more like in the real market, but still something that you should know. Profit potential. It's 1,500 in Forex, so with the standard lot. So you have, an upward movement up to here, and there definitely will be a retracement. No movement is linear. We see two relatively decent big candles. But if we go into, for example, a 1 hour chart, well, there it is, right? So essentially we got, instead of daily chart, 1 hour chart. So you see that there's a pull and a backward movement, a new high and a bit of a movement, a new high and a bit of a retracement, a new high, retracement, the bigger the move, the bigger the retracement, right? But we see this upward trend, and there it is. It touched that line that we've established together on Friday, and it is going through a bit of a pullback, and chances are that, yeah, it might be, it's still bullish. See, here it says that Schaff says there's going to be retracing, CCI is going away from it, so on an hourly chart, it's probably going to see maybe a little bit more of a downward movement still. Now, if we look at a 4 hour chart, that means that there's still a bullish dominant. Right, we got parabolic on the bottom. CCI is above 100. Schaff is not showing a retracement. And if we take a look at a daily chart, we see that a bullish pattern is just emerging. All right, we got a relatively long upward movement, right, with the new highest lows, right, established. So this is actually still a very much point of interest. This is, if I can just click on it, there we go. This is also a level of interest. Right now, this is still also a level of interest. All right, and this level right here is no longer valid. We have 1, we have 2, we have third point contact, and it finally broke through. So this one is no longer valid. Right, so now we're kind of keeping an eye out between all of these levels to see what the asset will do. If it breaks through this line, right, by the end of the day in 8 hours and 50 minutes from now, yeah, it's got a potential to, kind of close lower, but I still believe that the next candle is going to be green. So even though it's going to pull back, it could pull back a little bit further, depending on what time interval you use. But at some point, you would see that there is a good upward channel, or right, a trend, right? So a continuation. So when it comes to this line, it's a point of interest. You look at other indicators to, to confirm that it's got enough momentum to push through this level. If it pushes through this level, once again, the prediction, the Morpheus prediction, the red pill is in effect. It should go up to possibly to the level of resistance. All right, so this is why we're looking at, this is actually why this platform is so freaking awesome. It does give you opportunities to use multiple charts, right? So for example, I don't even know, there we go. This is a 10-minute chart, right here we see, there we go, a 3-minute chart. What do we got here? Oh, it's a daily chart. Let's put this down to 1 minute, right? 1 minute. So let's assume, right, and look at that. Well, actually, yeah, that's a good example. Let's assume you've spotted this particular, right, you've been scrolling through the assets, right? You just, highlighted a whole bunch of 92%. And you're like me who loves the trend. You go with the trend. You go with the trend until the trend reverses, then you spot a new trend. All right, so let's say you got 1 point contact, we got 2, we got 3 on the fourth one right here about 1429, let's say 1430, it broke through. Actually, I think that's exactly what I have here, right? So, yeah, there we go. All right, so at this point somewhere here, right, you see on a larger time scale, right, on a larger time scale or time intervals, that there is a breakout. And that it's after confirming a 3 point contact on the fourth one, it broke through. You're like, oh, hey, wait, we got a breakout, right? It's going down. Let's actually change this a little bit. We'll remove this just for a little bit. And right, 1 minute. Yeah. All right. So we confirm it with a smaller time interval with a 3 minute that, yeah, hey, look at that. Yes, indeed, it's actually going down. And interesting enough, look, we have a 1, 2, 3, 4, 5 red candles, right? From 1430, right about here somewhere. Yeah, at this candle right there. There is, 5, 10 minutes. So for 15 minutes, it's been going down. In this case, right about here, well, we see that there's a pull downward, retracement, pull downward, retracement, a further pull downward, retracement. Everything is going to go down with retracement. There's always going to be new lows or new, highest highs, lowest lows, or, things like that, higher lows. So these are the things that we keep in mind. And if we take a look right there from 14, what the hell was it, 1430, right about here, we also are able to, I don't know if I have enough tools to give me a trend line. There we go. From 1430 about here, we understand that the movement is predominantly negative, right? So it's bearish, which means that trend is your friend. You keep selling, right? Remember I showed you a particular, right? It's parabolic SAR 2.0. Now, Donald and Henry, you guys are like my freaking heroes, man. I love the fact that you guys are here almost every single day that I talk. But actually, Donald and Henry are, contacted me on the Telegram channel. We became very good buddies right away, and I guess that they're maybe even doing this just to support me. But we are discussing, if you want to kind of cover this one-on-one with me without any kind of BS, without any, I don't have a private jet, right? But I got a car of my dreams. I got a bunch of apartments. I got a house as well. My family is big. I'm not looking for, massive income. I'm looking for stability. But that's my goal, right? I'm not really pushing that on you. If you want to take this a little bit more aggressively, you can, but I would encourage certain stop losses, and this is exactly what we're going to talk about today. Today, we're going to talk about a certain point where you should say that, you know what, I'm done, right, for the day. Something that I'm doing is not working. Maybe I'm psychologically not, at the place where I should be. There has to be a stop. All right. Anyways, so let's kind of come back to what we were discussing here. So we understand that from this point about to here, right, we got the several points of contact, anytime there is a sell signal, see, I wouldn't be opening positions during a trend on a pullback, right? Because trend is your friend, right? There's nothing wrong actually with opening positions on a pullback, but maybe with slightly different money management, with slightly different intervals, right? With not as big a money amount. So if you're opening a sell position with like $5, right, because you have $1,000 or like $2,000-3,000 balance, and you decided to open it with $5 with like multiplier with like 1.3 or 1.5 or something on the low side, you're able to kind of go through with this. But on the pullback, you could open it for like $1. If you think that if it dropped down low, a little bit lower, and started to pull back up, you understand that it's got quite a ways to go until the resistance level. So in this case, yeah, it would probably be justifiable. But if you got here and it kind of came back down and then reversal up to this point, I really wouldn't do that. Small potential for small movement, fewer pips. See, I don't like winning when the candle is like this, right? It's just mostly wick and no body, right? I like to win when there's, you open here, it closes much higher, and you open here, it closes much lower. It's not quite as stressful. So anyways, ATR is a good indicator to kind of help you understand what kind of candles to expect. So we understood that watching a higher time interval, just a little bit building up on what we discussed on Friday, something a little bit closer, right? So you see only red candles, but here we see a whole bunch of green. And obviously here we see a whole lot more green than red, but generally it's dominantly bearish movement right up until this point right here when we understood the first candle at 1519. Where was it? About here, right? There we go. 1519. There was actually a buy signal. So you started to see a little bit of green, right? At these candles right here at 1519, right? This first 10-minute candle started to be green. And you realize that, hey, you know what? I think that maybe first of all, this particular support level is no longer valid, right? So you would say, hey, well, now we're looking at a bearish movement. And lo and behold, look at this beautiful thing. We got a 1, we got a 2, and we got right now a possible third point contact. All right, so if it bounces away from here, and chances are it will, maybe not exact science, maybe a little bit higher, maybe around here, but if it bounces away, we're going to have a 1, 2, 3 point contact and a possible, wait a second, there we go, and a possible squeezing factor right here between horizontal one and a possible, slightly increasing pinching factor with a slightly rising one. So we got a 1, 2, and we got a 1, 2 point contact. And if it touches and bounces back right now, when it takes through and it breaks, at this point is going to be a level of interest at this line. If it bounces away, then we have a confirmation between 1, 2, and third point contact, and it's going to be squeezed until it pops, right? It pops on the downside. If it pops on the downside, this is going to be the next level of interest. So you might say again, man, this is not really a big movement from here to here. But if we calculate the pips, you'd actually be surprised. I mean, people can make some decent money in this, right? Especially the fact that we're looking at 10-minute candles, and that's a whole lot of, pippage. A whole lot of pips between here and here. A 10-minute candle, one green, one red candle from here to here means 10 1-minute expirations where there's going to be predominantly red candles. So when it breaks through from here, the next level of interest will probably be the next, the previous highest low, right? And if it actually breaks through that, then we would need to readjust, and we could expect the new, drop to be somewhere around here, the new highest high, or the previous, or lowest high. Anyways, so this is the beautiful thing about taking a look at multiple charts to establish in what kind of dominant movement you can expect throughout the day, for example, right? If you're trading something a little bit bigger, like, 30-minute candles or something like that, then yeah, you would want to take a look at a daily chart, right? So we've established that, there was a lowest low, potential to go lower. This is where it is. Right, and so right now, though, we are seeing still, maybe at the end of this day, at the beginning of the following candle, we would see, once again, it testing the top line, and we would need to understand if it's going to bounce back on the day. Right now, though, it does look like it's going to be going up according to some of the indicators. I don't know, write in the comments, beside, if you guys, come across this video, write in the comments what kind of favorite indicator you got, right? But at this point right here, we had an upward movement signal from the MACD. We got a signal line and a MACD line crossing. We got the histogram crossing. At this point, we had, at this candle, we have a signal from shaft that the negative trend, that this trend is coming to an end, but now is going to be going upwards. We have parabolic, we have fractal. I mean, how many more confirmations do you really need that there's going to be an upward trend? And this being daily candle, we understand that this particular candle, what day was this? This was 19th. 19th. Actually, let's take a look. If we can, maybe take a look at the 10-minute candles on the 19th of May. All right, where are we? We're on 30th. It's going to take a while, but let's go back. Where were we? 25th. Now let's go back a little more. There we go, 22nd and 18th. All right, so at 19th, actually somewhere here, I think, right? There we go. At the 19th and 21, yeah, there was actually a really nice big move. Don't really factor these things in here right there. This is just we as clients from, I kind of mentioned this several times before. We as people, as clients of Pocket Option, we're the ones that push the asset up or down in the OTC. So the real price was somewhere, with the euro dollars around 112. We pushed it down to 108. So this is like a huge, huge difference. And at the moment when there are no when there are no positions that would be affected, Pocket Options equalizes the prices so that they would be, closer matching the realities, right? So when you're hopping back and forth between euro dollar and you see like 114, and then you go to OTC right now and you see 115, that's still, that's decent, but it's actually still a big difference, right? It's about 100 pips, it's quite large. That's why that's why they equalize these. That's why you see these big candles, but it doesn't affect anybody's, open position at the time. So if you open the position for a downward movement and they needed to equalize it, they wouldn't do it then. But if you have a bunch of open positions for a higher position, it's a fixed payout. So it doesn't matter whether you win by 1 pip or by 100 pips, you're still going to win a fixed payout, unlike in Forex. So, but anyways, let's come back to what we've discussed. All right, so some of us, right, if we look at the concept of stop loss, it's got like two meanings, right? So when we take a look at support and resistance levels, we actually are able to establish in Forex a position where you would open, when you open the position, where you want to take your profit, TP, right? Not toilet paper, but take profit, and SL, stop loss, right? So you would say you would calculate based on these moves, and I think like maybe a couple of weeks ago or something, right? We had I don't remember, with like 1 minute chart though. Was it on Friday? We had a wonderful head and shoulder pattern, and I've kind of shown you the possibility of what kind of potential it's got for a move, right? So it wasn't here. Just bear with me. I want to find it because it's kind of I think it's important. And was it here somewhere? No, it's 16. Because it was right in the middle of our stream. We saw this beautiful head and shoulders pattern. So was it Friday? I'm kind of curious if I can find it. Because support and resistance levels are able to, are something that you're actually able to put a stop loss in Forex. And I don't think it was here. Maybe it was in the previous day, but if I don't find it right now, you could look through the previous. There it is. Right? We had like after a nice move downward, we had a 1, we had a 2, we had a 3, and there's a neckline right here. Let me quickly, you know what, I'm going to Man, I don't want to delete the I'll delete it. Screw it. It's okay. You guys can look at previous videos as well to see that I'm not, kind of yanking your chain. I'm not bullshitting here. I'm showing you the right kind of rules and concepts to consider when you trade. Trading is not difficult, right? It's just like driving. But you ever seen I don't know, a new driver when taking their driving test, they're terrified, right? Because their knowledge gets put to the test. So this beautiful thing about Pocket is that you got demo account, you got tournaments, and you can test all of the things that I discuss based on logic, math, statistics, and all that good stuff. You can test it. You don't have to trust me. I don't want you to trust me. Who the hell am I? I'm not just like some guy on Twitch and YouTube right now who's telling you about this wonderful trade from anywhere in the world and make money lifestyle. But I do it with caution as well. This isn't, if this would be easy, everybody would be doing it. And, for some people, psychological strain is just not, it's a bit too much. So I've mentioned that if it's going to break out, it should go up, but that it could go up to the previous highest high, right? So we have these, right? So the new lowest highs, right? There it is right here, right? It kind of came out at around this level right here. There was a bit of a retracement. It tested the new high right about here, right about here. It kind of went for a retracement, a new high. There it is, this one right there, right? This one right here, and then there was a retracement. And I said that if it's going to go up, I think that we looked at it with a bigger time interval. Wait, oh yeah, we didn't click the right place. All right, I think that we looked at it with a, oh man, I have to go back like crazy long. Okay, hold on. Changing the time interval actually brought us back significantly. There it is. All right, so when we looked at a bigger time intervals, I said that, look, right here, this is actually a really decent resistance level that was touched once, that was touched twice. And if it's going to have a potential for a breakout, it's not going to establish a new high, but it might just reach the levels where the highest highs were represented. And sure enough, it did. Right, so when you open the position right here, right, base after their, inverse the head and shoulder pattern, after it broke through the neckline, I said, and you know what, it should go up to this point. So you can see in the 3-minute time intervals that predominantly it was going upwards. All right, so it broke through, a bit of sawed, broke through, a bit of retracement, broke through, new highest high, retraced the new highest high, retraced, and at that point it ran out of steam. So there it is. But at this point, if we, look at this size, and as I mentioned, I would kind of have adjusted it a little bit, and just like it was to these highest levels, these 2 points, right? We can take this particular movement, we would understand what kind of pip difference there is, right? So in this case, 1278 versus 12, what the hell is it? I can't see with that button. There we go, 1269 to 1291. So I would actually say 30 pips, right? 30 pips in the Forex market would mean that you're looking kind of like at like 300, 280, $300 worth of profitability. But anyways, with binary, you would understand that, yeah, it should go up. It could go up to here. And depending on how the market behaves, maybe it was going sideways, slightly up with these BS kind of small candles. But you still understand that there is kind of like an upward upward momentum, and that it's got potential to go to a particular point. However, you might have wanted, if this is 30 pips, to kind of stop it at like 10 pip. All right, so if you get into a 10 pip stop loss in binary in 2 candles, then maybe that should be your stop loss. You should wait until you establish the new lowest lows, highest highs, and you establish a particular channel. You'll look at, there's the lowest low, there's the lowest low, there's the lowest low, there we go, boom, boom, boom. There's a nice support level until it breaks through, or you've established, a relatively decent resistance level until it, kind of bounces away. So all of these things, right, in terms of calculating support and resistance levels, they're able to also give you a particular number where you think that, hey, it should go up, but in terms of pip size. But if it goes down into the opposite direction, you should kind of cut your losses and hold until the next opportune moment. They sound like Jack Sparrow, opportune moment, Will. Um, so I don't know really what the voice change if it came across anything other than creepy. Anyways, so knowing the potential movement, the size of the movement, right? If we're looking at a particular next highest high and it's got 30 pips with 1 minute candle, versus the following highest high, which could have like 10 pip difference, right? Where it, kind of touched a particular level of support and resistance. You should adjust your approach because obviously if it's smaller and at that point it would choose to reverse, then, you could lose. And at that point, higher probability of losing. Versus if there's 30 pips and you realize that, oh man, it broke through, it's got another 28 pips to go. Yeah, ride that train. Let it be your kind of trend is your friend kind of moment. And in 5, 10, 15 minutes, make your 5, 10, 20, 15%. And that's it. You're done for the day. 10% per day, 1,000 becomes $17,500 balance at the end of a month. Nowhere else are you going to get that kind of return on investment. Right? And it could possibly take you approximately 15, 20 minutes, maybe half an hour for you to spot a particular currency pair that is maybe with a 10-minute, like I showed you earlier, all right, with a 10-minute time interval spot a particular currency pair that's just about to reverse a particular or start a trend, right? It's been coming down for resistance level, and you realize that it's almost touching that resistance level, and then you wait another 5, 10 minutes, you see if it's going to break through, and at that point, with a smaller time intervals, you are able to ride that train every single minute. But you also look at support and resistance levels of previous highest highs or lowest lows, all right, and establish what is the percent, what is the pips value, right? What is the amount of time that it can move until that point. At that point, you should stop and wait and kind of see if it's going to break through. Then, you kind of calculate the pips and you just ride that train until the next level. There's going to be pullbacks. Understand when somebody takes in Forex, when they take but in binary, not everybody opens for a 1 minute candle. They might, somebody, right? Let's imagine that 10 people opened $1 position for, for 1 minute. But somebody opened a $1,000 position for 5 minutes, right? So the trend is going up, right? The people with, $1, these 10 people with $1, they open positions, but the supply and demand principles dictate somebody, and in this case, when they bought a $1,000 position, there was a lot of, kind of weight to that position. So yeah, the asset that was affecting supply and demand principles, and the asset started to go up. And the little fish, right, the $1 guys, they started opening positions for an upward movement. And, they're like, oh man, 1 minute they won. Oh, next one, oh man, 1 minute they won. 1 minute they won. It continues to go up. But this person's 5-minute position with $1,000 is expiring in 5 minutes, and at the end of that, it's a sell, right? When the position closes, it's considered a sell, and again, it affects the supply and demand principle, so there's going to be a pullback. All right, and this is where, we need to understand that different. Somebody will open it for 3-minute expiration, somebody for 2, somebody for 5, right? And it varies the amounts too, right? So it's not always a $1 position for 1-minute expiration, right? So we need to keep that in mind. But when we understand that, yes, it broke through a level, we have indicators confirming that it should go up to where? right? So if it goes up to the next level of, the next, I don't know, the lowest high, right? It's going up. It went up to the, previous, downward movement, next lowest high. At that in 1 minute, then you realize that, man, does it have a chance to break through to the next one? And if that movement was like 15, 20 pips, then in one go, then that's kind of aggressive. All right, and at that point, you might want to say, what is the probability that the next one is going to be equally as stimulating? Well, we do have indicators like ADX, we do have indicators like ATR that shows you if there's momentum or volatility enough for this movement to continue. And where does it continue? It continues to the next point of interest. So this is where we can assign a size of the movement based on support and resistance to a particular stop loss, right? Or position, a point where you will stop trading for just a moment to kind of confirm the potential for continuity. All right. So in the, this is the important part. So stop loss, it's several factors, right? In terms of in forex, this is where people say I open up because there's no expiration, right? So the asset could saw a particular level for like an hour and then go up or against you, right? So if you open the long position, you're not really losing on while it's moving sideways. You're not really gaining anything either. But if it goes against you, you put a particular stop loss. So out of, like, let's say $1,000 investment, you say that, what, if I lose 150 in this position, it'll close. So my balance will be 850. Let's assume like that. It's not really, it doesn't work like that, but just for clarity. But, at that point, so you're like, maybe in an hour, maybe in, for a couple of hours or in 15 minutes, it goes up and finally the supply, the ask and bid prices are exceeded. You start making money until it goes to a particular point. There's also trailing stop loss, which is also very cool because if it goes up, as soon as it, into $500 profit, if at that point it starts going against you and you lose 150, it closes still you in profit. But that's also, once again, different topic, different kind of way of trading. But once again, we as binary option traders, we can implement this in our trading to understand the probability when there might be a pullback. Right. So if you got like, between the breakout strategy with indicators confirming that it's going to go up from that particular point to the next point of interest is 40 pips, right? And each candle moves by 5 pips, upwards, upwards, upwards. You got like 8 green candles, which is not really a, staggering pip difference, but it's something that you would say, that, what, I'm going to continue to go. I'm going to ride this trend until it reaches that level. And once it reaches the level, probably at that point you will see a bit of a pullback, the right establishment of a new highest low. And at that point, when there is a reversal, like fractal showing you that it's a good time to open the position, you continue to ride that train until the next level of interest, right? And that's for like take profit. But if that size, right, let's say 20 pips or something size is covered within one candle, lots of volatility, right? And whoosh, it reaches that. What are the chances that it's going to continue to go up equally as aggressive? Unless it's something like fundamental analysis, like this week there's going to be NFP. Yeah, I mean, that's definitely a possibility at that moment in the real market because millions and millions of people are affecting these supply and demand principles. But in terms of binary, in terms of OTC, once again, what kind of probability that is going to match that 20 pip movement is big. What are the chances that the second candle is going to be equally as impressive? And at that point, you might say, what, stop. Stop. I'm going to stop. Stop loss essentially means stop at certain point. All right. And then, take a break and, or, see what the asset is doing. If it's going to continue, look at other indicators to see if there's enough momentum behind it. So if you open the position, it, has higher probability of you closing in profit. All right. Having said that, there is the other aspect, I guess, the other, am I talking too long? Okay, everything's fine. All right, so if we look at, if we look at statistics, right, in terms of today, All right, I lost a bunch. Was it today? Oh no, that was actually last week. Yeah, see, I didn't really even trade this week yet. Anyways, when we look at our trading, when we think of financial independence, and probably tomorrow I'm going to show you different charts in Excel that show you some statistics, some numbers, right? So most people think for some reason that this is where you win money, all right? But we need to understand that it's here that you win money. You see, we establish a particular statistic here, a particular result, all right? So we understand that, if we, and I'll show you several charts tomorrow. We need to understand that trading is one with proper investment. It's not really something that you need 80 percentile success rate to be in profit in binary options. No, you don't. You need like, around 50, not even 50, right? Around 50. If it's like 55, 60, man, you're freaking doing great, right? If it's like 53 or even like 47, 45, you can still make money. You can still make money. This is very important. And actually, you know what? You don't even need to take my word for it. I can prove it to you. But, a step back. Trading is one with understanding of probabilities, right? So you understand that your probability of winning a successful trade is 1 out of 2, right? If you're at 50 percentile. But the statistic will sometimes, bring, not be as accurate, right? So it will be, maybe you'll lose 3 in a row and you'll win on the fourth one. So technically your statistic is 1 out of 4, right? But when we gather this information across the board, um, to include a particular period, right? It's not for one day. It's not for 2 days. It should be for a couple of days, right? For like a week, for a month. The longer, the better. But you'll understand really the math involved. And actually, you know what? Wait a second. Just FYI. Let's just switch over here. Look, the top trader for the past 24 hours, this particular user, opened 151, positions, 56% in the, success rate. 56%. So we're looking at 7,500. I think that's kind of high for this kind of statistic, which kind of makes me believe that he opened very large positions. Let's see. There we go. All right. So user from Ukraine apparently. 140 positions. This is more like it. This is more like, how the hell is he in profit? But essentially, it's 1 out of 2. You lose one, you win on the second one. You lose one, you win on the second one. You lose 3, then you win 3 in a row, right? So 49%. There we go. So this right here, this is a machine gun Kelly. This is a machine gunner with like a mini gun. God damn. 5,184 positions, 54% success rate. This is a person that has $1 or $10 or like, somewhere in that range, and who sees a signal for a buy, and instead of opening a position for like $100, he'll, click the crap out of the mouse button and open like, 50 positions, in a row with like a timer. And as long as it closes higher, all of those positions will end up in profit. I gotta tell you that through 12 years of talking to people about this, I've never seen a long-term successful trader who's a machine gunist. Usually they're like snipers. All right, so very, very high success rate. This is maybe more luck. Look, 41. Now that sounds also kind of reasonable. 79 signals per day. That means, that's still, for me, that means that he had to have, kind of gone with the trend, open positions for every couple of minutes, if not every minute. And look, 41% success rate, 2,600. Why am I, kind of highlighting this and pointing this out? Because the truth of the matter is that you win in your money management. As long as you understand your statistics, you can fit your money management to your stats, right? So you can adjust the multiplier, you can adjust the investment size. You'd be able to give yourself, instead of three, martingale steps, you get yourself 4 or 5, right? So all of these things are really, really, like the most important aspect of establishing also your potential for growth, but also where you should stop. Tomorrow, I'm going to show you the numbers. I always say your 1,000 at 10% per day is going to reach 17,500. I'll show this to you tomorrow, right? And I'll also show you that even if you don't trade every single day, you're going to be in super freaking profit. Even if you're not going to, even if you're going to trade and you're going to lose, let's say that out of 30-day month, if you don't trade, if you trade 25 days, right, you got a girlfriend, you got, romance and bromance, whatever, family, obligations, jobs, hobbies, you're not going to trade every single day, right? Especially if you got only like 4 or 5 signals per hour, all right? So, but be that as it may, 25 days. What if I tell you that you can lose like 5 days? Instead of making 10%, you're losing 10%. Right? So technically, out of a month, you need to be like 15, 17 days in profit, allowing yourself 5, 6, 4, 5, 6 crappy days where you can be in the month. And at the end of the month, or in the loss, and at the end of the month, you're still going to see biggest profit than if you invested that money into any savings account or invested into your friend's business or something like that. The next highest profitability potential is probably cryptocurrency, because traditional investing in terms of stock market, bonds, futures, you're looking at like 5, 10, 15 maybe percent. I would say probably at most, maybe 20% if there's, some sort of stars align, a year, not in a day, not in a week, not in a month, a year. Right? So this is where I would always encourage people to put math as the first, as the priority in building their strategy. So nobody's rushing you to, take out a loan. Please don't take out a loan. But nobody's rushing you to take out all your savings, for example, and start trading immediately, because you have this potential to triple, quadruple, and so on in a matter of moments. This is the instrument that is great at improving your financial independence, but it has its drawbacks. The biggest factor that everybody seems to be missing is factor of time. Everybody thinks that this is something that's immediate instead of something that should be considered over time. When you lose on the day, on the daily basis, for some reason, it's not a problem if you buy stock and it rises for a week, but then it drops down into the red, and then it rises a little higher. You don't panic when it drops into the red. But here, for some reason, it is a psychological factor. For some reason, people lose their minds when the asset goes, or when their balance goes into a bit of red zone, or day ends up in the red zone. It's not a big deal. All right, it's still, across math, statistics, logical approach on how to attune all of that, so that at the end of the month should be that minimum interval that you consider as progressive or not in your trading. It shouldn't be weekly. It definitely shouldn't be daily. All right, but we'll go into this a little bit more in a greater detail later. So, my dear friends, Donald, Henry, thanks once again being with me, guys. Telegram channel, it's listed. If you if you want some massive advantages, we trade on pocket option. The link is below. I can even insure your trading against losses, something that you can discuss with me in private in Telegram channel, one-on-one, talk and trade with me. Once again, I want to highlight, my friends, that I'm not selling a trick. I don't want you to trade like me, but I will explain everything that's involved, give you all of the instruments where you'll be able to, kind of pick out what you need based on your psychological control, based on your financial abilities, based on your stress resistance, based on all of these things. You'll be able to take a plan and exclude luck out of it. That's what I'm trying to do. So there's many strategies that I would never do, but they work for others. I will explain these to you as well. So in these courses or in these videos and live streams, this is not something that I can tailor. In live streams, I show you that progress is possible. We make money together, and most importantly, I'm hoping to get across to you everything that's needed for you to be comfortable with your knowledge, with the rules that govern this particular system. But anyways, Pocket Option, great platform. They always pay. That's something that I like about it, and you never really see some sort of glitches when you're trading with this regard. Telegram channel is there for you to be able to reach out to me directly, to our team, and get get clarity to any questions that you might have. So my dear friends, thank you so much again for being with me. I'll see you tomorrow with the proof, the trading by the book, with the proof is in the pudding. The red pill is coming. All right, my friends, I'll talk to you tomorrow. Bye.